At this conference last year, the single major topic of conversation was the price of oil and where is the price of oil going. Certainly from yesterday's panel discussion, day one of the 2017 conference, that no longer seems to be the case. 2016 was a breakthrough year for the GCC capital markets. We saw a record 184 billion of issuance, US dollars issuance, across the Middle East. I don't expect to see that quantum of issuance repeated this year. Why is that? Well, certainly the oil price has not regained its dizzy heights of 2-3 years ago, but we've certainly seen the oil price stabilize, and consequently the significant quantum of sovereign fundraising that we saw in 2016, I don't expect to be repeated this year. What I expect is probably a normalisation of fundraising, maybe not at 184 million that we saw in 2016, but certainly at a number somewhere close to that. What's been interesting, however, so far in 2017 is that the debt capital market continues to be firing on all cylinders. We had a record Q1. 43 billion of issuance across the Middle East, continuing to see leadership from key GCC sovereigns. We saw Kuwait come to the market with a debut transaction of 8 billion US dollars. In stark contrast, the syndicated loan market, is really very, very quiet. Only 9 billion US dollars worth of fundraisings in Q1. That's the lowest start to the year that we've seen in the Middle East since 2011. So a significant divergence between capital market issuance and syndicated finance issuance. And I expect that we'll probably see that continue throughout the year. And why is that? To a very large extent, it's because of the stabilization that we're seeing in the price of oil. 2016 was a banner year for GCC sovereign issuance. We saw debut transactions from the government of Oman, the government of Saudi Arabia. We saw the Abu Dhabi sovereign issue after a period of being absent from the market, the same with Qatar. This year, 2017, the only new name we've seen so far is from the government of Kuwait. There was much speculation, indeed it was a topic on one of the panels yesterday, day one of the Bonds, Loans and Sukuk Middle East Conference 2017, as to is corporate issuance being crowded out because of increased government supply. That was probably a legitimate question to pose last year. I don't see that being the case in 2017 and going forward. I see a normalization of GCC sovereign issuance, certainly elevated from the almost non-existent levels that we were seeing a few years ago, but certainly not of a sufficient quantum to crowd out corporate supply. I think the issue around corporate bond issuance is more there's a lesser requirement from many corporate borrowers to actually fund at the present time. We had a very favorable funding landscape last year and the previous year, and a lot of pre-financing and refinancing was accelerated in 2015, 2016. And to my mind, that's a more plausible explanation to the lower levels of corporate issuance that we're seeing, not only in bonds but also in syndicated finance so far in 2017, rather than there being a crowding out effect from the region's sovereigns.